$38 trillion. That's America's national debt right now, today, not next year, not projected, actual debt sitting on the books as of December 2025. And if you think that number doesn't affect you personally, I need you to listen very carefully to what I'm about to tell you. Because while you were scrolling social media and watching Netflix, the largest financial institutions in the world started doing something they haven't done in 75 years. They're moving money, massive amounts of money, out of dollar-denominated assets quietly, systematically, without headlines. And this isn't conspiracy theory. This is documented capital flow, public filings, treasury data, numbers you can verify yourself. By the end of this video, you'll understand exactly what's happening, why it's happening, and most importantly, what comes next. Because there's a pattern here, a mathematical pattern that's played out 3 times in the last 500 years. Same stages, same warning signs, same devastating outcome, and we're watching it unfold again right now in real time. The only question is whether you'll see it coming or whether you will be asking, like millions before you, how you missed all the signs. Stick with me, because the next 15 minutes will change how you think about money forever. Global debt just hit $251 trillion, according to the IMF's latest data. That's 235% of global GDP, the highest ratio in recorded peacetime history. U.S. debt alone jumped from $36.1 trillion in January 2025 to $38.4 trillion by December, a $2.3 trillion increase in 11 months. But here's what nobody's telling you. This exact scenario has happened before 3 times in modern history. And every single time, the country holding their reserve currency collapsed within 36 months of the smart money leaving. Not similar collapses, identical patterns, same stages, same timeline, same result. Now, the pattern is mathematical, predictable, and unfortunately unstoppable once it reaches a certain point. Let me show you how it works. Every major economic collapse in the last 5 centuries followed a precise 4-stage cycle. Stage 1, the ascension phase, a nation becomes the center of global finance. Capital floods in from everywhere. Their currency becomes the standard for international trade. Everyone wants in. Banks expand, markets boom, innovation accelerates. The future looks limitless. Confidence is absolute. The stage typically lasts 50 to 80 years. Stage 2, the overextension phase. Success breeds arrogance. The government starts spending beyond its means. Military expansion, foreign interventions, domestic programs, all funded with borrowed money. Debt grows faster than the economy. But nobody worries because asset prices keep rising. Real estate booms, stock markets hit records, everyone feels wealthy. Central banks print money to keep it going. This stage lasts 20 to 40 years. Stage 3, the silent exodus. This is the critical phase. The smart money sees what's coming. Not the public, not the politicians, just the people who actually read balance sheets. Major institutions start quietly rotating capital out. No announcements, no press releases, just systematic calculated movement into safer jurisdictions. Foreign investors reduce holdings. Wealthy families diversify internationally. The exodus begins slowly at first, then faster. This stage lasts 18 to 36 months. Stage 4, the collapse. The currency loses reserve status. Foreign central banks dump their holdings. Inflation explodes, interest rates spike, asset prices crash simultaneously, banks fail, pensions evaporate, the middle class gets destroyed. Political chaos follows, and everyone asks the same question. How do we not see this coming? The answer? The pattern was always there. Now let me prove this pattern is real with 3 historical examples. 3 global superpowers, 3 reserve currencies, same exact cycle, same exact outcome. 1500s, Spain, the most powerful empire on earth. No debate, no competition. Spanish galleons returning from the Americas, loaded with more gold and silver than had ever been seen in human history. The Spanish real was the global reserve currency. If you wanted to trade internationally, you needed real. Madrid was the financial center of the known world. Stage 1 complete. King Philip II controlled half of Europe. Spanish armies were considered unstoppable. The Armada ruled the seas. Wealth poured in from every colony across 3 continents. And what did they do with it? They spent it on everything. Wars with France, wars with England, wars with the Ottoman Empire, wars with the Dutch, a massive military presence spanning 3 continents, a bureaucracy that consumed fortunes, royal palaces that cost kingdoms, and the Spanish Inquisition burning money, along with heretics. By 1550, Spanish government spending was running at 300% of revenue, 3 times what they collected in taxes. The difference was borrowed from Italian banks, from German merchants, from anyone who would lend. But gold kept flowing from the New World, so nobody worried. Asset prices in Spain kept rising. Everyone felt rich. The empire seemed invincible. Stage 2 verified. Then something changed quietly. In 1555, major Spanish banking families started moving assets to Genoa. The Fugger family, Spain's biggest creditors, began demanding repayment in gold instead of promises. They wanted out. Now, in 1556, wealthy merchants transferred operations to Amsterdam, not all at once, but gradually opening offices, moving inventory, and redirecting trade routes. Why? Because they could read financial statements, and the statement said Spain was functionally bankrupt. The Spanish government was paying 40% interest on some loans. 40%. That's not a sign of strength. That's desperation bleeding through official documents. Stage 3 documented. In 1557, Spain defaulted on its debts for the first time. Credit markets froze. Spanish bonds became worthless overnight. The government seized private gold shipments to pay soldiers. Chaos spread through the financial system. But the king promised it was temporary, a one-time problem. Everything would be fine. In 1560, Spain defaulted again. In 1575, again. In 1596, again. In 1587, again. 4 defaults in 40 years. The currency collapsed. Inflation destroyed the middle class. Spanish power evaporated like morning fog. By 1600, Spain was a shadow of its former self. The golden age was over forever. It never came back. Stage 4, complete. Where did the money go? North to the Dutch Republic, Amsterdam became the new center of global finance. Which brings us to example 2, the 1600s. Amsterdam, the richest city in the world by far, by every measure. The Dutch East India Company was worth $8.28 trillion in today's money, more than Apple, Microsoft, Amazon, and Google combined times 2. Dutch banks financed global trade. The Amsterdam Stock Exchange was the first in history. The guilder was the world's reserve currency. International business required guilders, period. Capital flowed into Amsterdam from everywhere. Asia, Africa, the Americas, Europe. Money-seeking returns found its way to Dutch banks. The Dutch Republic in the 1600s was like Silicon Valley, Wall Street, and London combined into 1 square mile. Now, I know some of you are thinking, where is he getting these numbers? Fair question. Every single figure comes from official sources. Treasury Department, IMF, congressional reports, all verified, all linked in the description. Check them yourself. Stage 1, undeniable. Then came the wars. Always the wars. 3 Anglo-Dutch wars between 1652 and 1674. Wars with France. Wars with Spain. The Dutch military presence stretched from Indonesia to Brazil to South Africa. And it all cost money, enormous amounts of money. Government debt increased from 4 million guilders in 1650 to 80 million by 1690. A 20-fold increase in 40 years. To pay for it, they printed. Sound familiar yet? Meanwhile, tulip mania hit. Tulip bulbs selling for more than houses. A single rare bulb could cost 10 times an artisan's annual income. Asset prices completely detached from any economic reality. Everyone was getting rich on paper. The Bank of Amsterdam, supposedly the safest institution in Europe, was secretly lending out depositor money to fund government wars. They were running fractional reserve banking before it had a name, a Ponzi scheme dressed in legitimacy. Stage 2, check. 1690, the smart money started moving. Major banking families transferred operations to London. The Sephardic Jewish merchants who'd made Amsterdam wealthy began relocating. Portuguese traders opened offices in England. German financiers pulled capital out systematically over years. Why? Because the insiders knew something the public didn't. The Bank of Amsterdam was broke, had been since 1672. They'd been using new deposits to pay old withdrawals for decades. Classic Ponzi mechanics. But the secret was kept until it couldn't be kept anymore. Stage 3, verified. 1795, French revolutionary armies invaded. The Dutch Republic fell. The guilder collapsed. The Bank of Amsterdam's fraud was exposed. Depositors lost everything. Riots in the streets, political chaos. The Dutch Golden Age ended. Just like that. 150 years of dominance gone in months. Stage 4 complete. Where did the capital go? London? Britain was next. The cycle continued, which brings us to example 3. And this one matters because it's the most recent, the closest to our current situation, 1700s to 1900s. The British Empire. The sun never sets on the British flag. You know the line. Everyone knows the line. At its peak, Britain controlled 23% of the world's population, a quarter of Earth's landmass. The pound sterling was the global reserve currency for over 200 years, longer than any currency in modern history. The City of London was the center of global finance. Need capital for anything anywhere? You went to London? British banks financed railroads in America, mines in Africa, plantations in Asia, infrastructure on every continent. Over 60% of international trade was settled in pounds. The gold standard was built around sterling. British power seemed infinite, eternal. Stage 1, absolute. Then came the 20th century and 2 world wars. World War I cost Britain $44 billion. That's over $600 billion in today's money. They borrowed from America, from their own citizens, from anyone who would lend. Government debt went from 30% of GDP to 130%. Remember that number, 130%. The same level America is at today. They tried to stay on the gold standard but failed in 1931. They tried again after briefly returning but failed again in 1933. The system was breaking. World War II made everything worse. More debt, more printing, more promises they couldn't keep. Britain ended the war, technically victorious, but financially destroyed, broke, and dependent on American loans to survive. Stage 2? Check. 1949, the quiet exodus began. Major British corporations started moving operations to America. Unilever, Shell, British Petroleum were not shutting down in Britain, just shifting investment, redirecting capital, building elsewhere. Wealthy British families transferred assets overseas to Switzerland, to America, to Canada, to anywhere that wasn't overtaxed, overregulated, and declining Britain. The brain drain accelerated. Scientists, engineers, entrepreneurs, academics, all leaving for opportunities in America. Britain offered high taxes and declining prospects. America offered growth and opportunity. The choice was obvious. By 1960, foreign investment in Britain had fallen 62% from pre-war levels. The money was leaving. The talent was leaving. The future was leaving. Stage 3, check. 1967, the pound devalued 14.3% overnight. One day you wake up and your currency is worth 14% less. The government had no choice. They'd run out of foreign currency reserves defending the exchange rate. The game was over. In 1976, Britain went to the International Monetary Fund for a bailout. A bailout. The former global superpower, the empire on which the sun never set, had to beg for emergency loans like a developing nation. The humiliation was complete. The pound lost reserve currency status. International trade shifted to dollars. Britain's century of financial dominance ended forever. Stage 4, verified. 3 empires, 3 reserve currencies spanning 500 years. Same 4-stage pattern, same outcome. Spain, the Dutch Republic, Britain, all follow the exact same path from dominance to collapse. Now, let me show you why America is in stage 3 right now. 1944, Bretton Woods. America becomes the global reserve currency. The dollar is backed by gold at $35 per ounce. Other currencies are backed by dollars. The system is born. America wins World War II. Europe and Asia are in ruins. Capital floods into America. U.S. markets become the deepest and most liquid on earth. Everyone wants American assets. Stocks, bonds, real estate, treasury securities. The Golden Age begins. This lasts from 1945 to 1971. 26 years of absolute dominance. Stage 1 complete. 1971, August 15th. Richard Nixon ends gold convertibility. The dollar becomes pure fiat currency. No gold backing, no commodity backing, just faith in the U.S. government, just trust. And what happens when you remove all limits? Spending explodes. 1980, U.S. national debt is $900 billion. Seems like a big number, but watch what happens next. 1990, $3 trillion. 2000, $5.6 trillion. 2008, $10 trillion. 2020, $27 trillion. January 2025, $36.1 trillion. December 2025, $38.4 trillion. That's a 4,200% increase in 45 years. The debt more than doubled in just 5 years. But that's only government debt. That's just part of the picture. Corporate debt hit $13.5 trillion. Household debt, $18 trillion. Student loans, $177 trillion. Credit card debt, $1.1 trillion. Auto loans, $1.6 trillion. Medical debt, hundreds of billions. Total U.S. debt over $100 trillion. That's 370% of GDP. For context, Spain defaulted at 200% debt to GDP. The Dutch Republic collapsed to 250%. Britain lost reserve status at 130%. America is at 370% and climbing. How do we pay the interest? The government now pays over $1 trillion per year just on interest payments. More than defense spending, more than Medicare, more than most entire government agencies combined. $1 trillion, just interest. Not paying down debt, just interest. And how do we fund that? We print money. M2 money supply increased from 15.5 trillion in February 2020 to 21 trillion by April 2022, a 40% increase in 26 months. The largest monetary expansion in American history ever by far. What does that create? Inflation, asset bubbles, wealth inequality. All the classic signs of stage 2. Stock market at all-time highs while real wages stagnate for workers. Price to earnings ratios at dot-com bubble levels. Housing prices up 73% since 2019. Everything's inflated. Every asset class simultaneously overvalued. The Federal Reserve's balance sheet went from $800 billion in 2008 to $9 trillion in 2022. They bought everything. Treasuries, mortgage-backed securities, corporate bonds, propping up asset prices artificially. Stage 2, complete, verified, mathematical. Now, here's where it gets really interesting. Stage 3, the exodus. China held over $1 trillion in U.S. treasuries in 2013. Today, $760 billion. They've sold over $300 billion in the last decade. Documented public record. Japan, the largest foreign holder, reduced their position by $220 billion since 2022, selling quietly month after month. Saudi Arabia is selling. Belgium reduced holdings. Switzerland is selling. France is reducing exposure. Even the Federal Reserve itself is reducing its balance sheet. Quantitative tightening. They're letting bonds mature without reinvesting, draining liquidity from the system. So, who's buying U.S. debt now? Mostly the U.S. government itself, the Federal Reserve, government pension funds, circular financing, printing money to buy your own debt. That's not strength, that's desperation. And it's not just governments. Major financial institutions are restructuring. BlackRock, the world's largest asset manager with over $10 trillion in assets, has restructured portfolios, reduced U.S. Treasury exposure, and increased positions in emerging markets, European infrastructure, Asian real estate, gold, and commodities, diversifying away from concentrated dollar exposure. J.P. Morgan restructured institutional allocations. Goldman Sachs reduced U.S. equity recommendations. Morgan Stanley increased international allocation guidance. Bridgewater Associates has been warning about dollar devaluation for years and positioned accordingly. The smart money is moving just like they did in Spain, in Amsterdam, and London. Check. Stage 3 verified. Stage 3. Now let me tell you what happens in Stage 4. Based on the pattern, based on history, based on mathematical inevitability, the dollar gradually loses reserve currency status. Not overnight, not with a single announcement. Gradually, then suddenly, countries start settling trade in other currencies, UN, euros, bilateral agreements that bypass the dollar entirely. It's already happening. China and Brazil trading in yuan, India and Russia settling in rupees, BRICS nations developing alternative payment systems. Over 40% of global GDP now in BRICS-aligned countries building infrastructure to trade without dollars. And here's a critical point. There was widespread reporting in June 2024 about the petrodollar agreement ending. Let me be clear about what actually happened. The 1974 U.S.-Saudi Joint Commission on Economic Cooperation expired, but fact-checkers confirmed there was never a formal written agreement requiring Saudi Arabia to price oil exclusively in dollars. It was an informal arrangement, an understanding. However, and this is crucial, Saudi Arabia has recently indicated a willingness to accept other currencies for oil. They've explored yuan-denominated transactions. The practical effect is the same. The dollar's exclusive grip on oil markets is loosening. The petrodollar system is fracturing, just more slowly than sensational headlines suggested. When dollar demand drops significantly, what happens to all those dollars sitting in foreign central banks? They come home, flooding the U.S. economy. That's when inflation goes vertical. The Fed will face an impossible choice. Raise interest rates dramatically to crush inflation, which makes the $38 trillion debt completely unpayable and crashes the economy, or keep printing, which destroys the currency through hyperinflation. Either path leads to the same place. Asset prices crash because liquidity disappears, stocks, bonds, real estate, everything deflates simultaneously. Banks fail. Pension funds go insolvent. Insurance companies collapse. The cascade begins. And the middle class, holding most of their wealth in dollars and dollar-denominated assets, gets completely wiped out. Savings evaporate. Retirement accounts vanish. Home equity disappears. This isn't speculation. This is the pattern. And it's happened every single time. Now, I know what you're thinking, but America is different. We have the strongest military in history, the most advanced technology, the best universities, the most innovative companies. This time won't be the same. Let me tell you something that history proves over and over. Spain had the most powerful military in the 1500s. It didn't stop economic collapse. The Dutch had the most advanced financial technology of the 1600s. They invented modern capitalism. Stock markets, central banking, options trading didn't stop collapse. Britain had the largest empire in history. The Industrial Revolution, a global navy, unmatched trade networks. The sun never set on the British flag, but it didn't stop collapse. Military power doesn't prevent economic mathematics. Technology doesn't stop currency debasement. Innovation doesn't overcome fiscal insanity. And exceptionalism is just a story empires tell themselves before they fall. But the Fed can print infinite money. They'll never let the system collapse. They printed infinite money in Weimar Germany. Hyperinflation destroyed the middle class. Savings became worthless. A wheelbarrow of cash couldn't buy bread. They printed in Zimbabwe $100 trillion notes, completely worthless pieces of paper. They printed in Venezuela. Inflation hit 1,000,000%. People were eating zoo animals to survive. Doctors and lawyers were working as taxi drivers. They printed in Argentina. Multiple currency resets. Decades of poverty despite massive natural resources. Printing money doesn't create wealth. It transfers it from savers to debtors, from workers to asset holders, from the middle class to the financial elite until confidence breaks. Then it accelerates the collapse. Every empire thinks it's different. Every reserve currency believes it's permanent. They're always wrong. The pattern doesn't care about narratives. It doesn't need your permission. It doesn't wait for consensus. It just unfolds like clockwork, like mathematics, like gravity. And right now, all the indicators are screaming stage 3. So what does this mean for you practically, specifically starting today? First, if most of your wealth is in dollar-denominated assets, you're exposed. Not might be, you are. Diversification isn't a nice to have anymore. It's survival. Consider assets that hold value during currency debasement. Gold has held value for 5,000 years across every civilization. Silver, commodities, real assets that can't be printed into existence by central banks. Second, geographic diversification. If major institutions are moving capital internationally, consider following. Not all your money, but some. Research stable foreign currencies, Swiss francs, Singapore dollars, Norwegian kroner, spread political risk across jurisdictions. Third, understand the timeline. Stage 3 doesn't last forever. Historically, it lasts 18 to 36 months from start to finish. We're probably 12 to 15 months in based on when foreign selling accelerated. That means you have time, not years, but months. Use it wisely. Fourth, increase liquidity. Keep accessible cash. Yes, it loses value to inflation, but in a crisis, liquidity gives you options to buy crashed assets and to move quickly when opportunities appear. Illiquid assets trap you exactly when you need mobility most. Fifth, reduce debt. High debt in a rising rate environment is financial suicide. If you're leveraged, deliver now. Every point interest rates rise makes your debt more expensive to service, and rates are structurally going higher from here. Sixth, invest in skills and relationships. The one asset that survives every collapse is human capital. Skills that create value, knowledge that solves problems, relationships built on trust. These can't be inflated away or confiscated by governments. Seventh, stay informed. The people who survive these transitions are the ones who see them coming, who understand the pattern, who don't wait for mainstream media to confirm what's already obvious from the data. Subscribe to this channel. Hit the bell because the next video breaks down exactly which assets historically performed best during stage 4 collapses, which ones preserved wealth through hyperinflation, and which ones completely destroyed it. I'll show you what happened to gold during Britain's collapse, what happened to real estate during Spain's defaults, and what happened to stocks during every major currency crisis in history. Because the pattern repeats, the cycle continues. And if you know the pattern, you can position yourself correctly. This isn't fear-mongering. This is pattern recognition. This is 500 years of economic history showing you the same cycle over and over and over. America's debt hit $38 trillion for a reason. Foreign central banks are selling for a reason. Major institutions are diversifying for a reason. They see the same pattern you just learned. The same pattern that destroyed Spain, that destroyed the Dutch Republic, that destroyed Britain. We're in stage 3, the capital flight phase, the silent exodus. The smart money is leaving. The warning signs are everywhere if you know what to look for. Stage 4 is coming. The mathematics are inevitable. The only question is whether you'll be positioned correctly when it hits, or whether you will be asking, like millions throughout history, how you didn't see it coming when all the signs were right there in front of you. The information is here, the pattern is clear, the data is verifiable, the choice is yours. Drop a comment below. Tell me what you think, what you're doing to prepare, where you disagree, and what questions you have. I read every single comment. Subscribe now because the next video reveals 3 specific sectors that historically outperformed during currency crises. Sectors that could protect your wealth or even position you to profit from what's coming. You don't want to miss it. The pattern doesn't care if you believe in it. It doesn't need your faith. It doesn't require your acceptance. It just unfolds like every time before. Thanks for watching. And remember, the people who survive these transitions aren't always the ones with the most money. They're the ones with the best information and the courage to act on it.